It's my honor and pleasure to now invite the keynote speaker for the day, Mr. Manav Bansal, Managing Director and Head of India, British International Investment, which is UK's premier development finance institution and has been at the forefront of supporting sustainable and inclusive growth of economies for over 70 years. BII partners with innovative businesses in emerging countries by investing in patient capital. Mr. Manav Bansal leads BII's vision of supporting private sector growth and long-term sustainable development in India, with a special focus on climate finance. Mr. Bansal and his team partner with businesses working on innovative solutions that address India's ambitions to meet renewable energy capacity by 2030. With that, I'd like to invite Manav Bansal to share his thoughts.
Thank you. Thank you, Divya, and thank you, India Investment Impact Council, for inviting me to address and speak. I see the cover photo as one of iMerit, which is one of the most inclusive and interesting investments we've made. If you can, I will use the slides to speak a bit, but essentially the focus of what we're going to speak about today is the need, where and what BII has done, and some thoughts for the future that panelists and speakers can then deliberate about. If we could move the next slide, please. Yeah, and the next one, please. Thank you. Not much to say. We all exist in our jobs and in our roles because we collectively believe that there is a lot to be done in India. While we made a lot of progress, especially since the liberalization, we all believe that the growth could be more inclusive, more uniform. We still have large swaths of communities which have not benefited from the prosperity that has been created. And the fact remains that India still has more people living in poor and poverty than any other country in the world. And it is our solemn mission and goal to ensure that we do something credible and constructive about it. We also have another challenge, which is becoming increasingly big, which is to do with climate change. India is going to be one of the most impacted and certainly one of the largest, most impacted country in the world. And any solution for climate change cannot happen without India being a part of it. If you could go to the next slide, please. BII is been, or as we were known as CDC, is one of the premier institutions supporting India's development for the longest time. We have more than 25 years history in India, the oldest and the largest DFI. There was an interesting statistics that I came across that in early 2000s, almost 20 to 25% of all the capital that went into all the private equity funds actually came from BII. So in many ways, the entire PEVC ecosystem was birthed with the help of BII. Over the years, that ecosystem has grown, as we have proudly seen it grow, and we have become more and more specialized. Not only that, some of the seminal work that got done in India, for example, birth of IT, we were a part of that. Birth of large pharma, we were part of that. Birth of privatization, we were part of that. So wherever was the greatest need for the country at that point in time, we found BII to be there supporting communities, businesses, and the governments. We can go to the next slide, please. BII in India is actually the key strength of BII in India comes from its large presence on the ground. We have 2 offices in Bombay and Bangalore. We have more than 30 staff. I think now we're actually going to cross 50. This is as fast as we're growing. And we are the only development financial institution in the country which has full stack of people, which means we also have not only the deal teams, we have also the legal professionals, the development experts. We have the entire set of people who can take the transaction and close it in India. Why is that important? It is important for multiple sets of reasons. One, it allows us far greater reach, far deeper understanding, and far more flexibility to look at transactions because we don't have to take everything back to headquarters. We have to take it for investment committee purposes for sure, but our ability to manage and conclude transactions within the country is so much higher. What it also does is that it allows us to have much closer dialogues with the stakeholders, including the likes of IIC, because then we can co-curate solutions that are important. We have $2.5 billion almost of investments currently in India. We are investing between 500 to 800 million dollars every year, which, as you would imagine, is a substantial amount of capital. We also have a great degree of flexibility in our capital. We invest in debt, we invest in equity, we invest in intermediate vehicles. We continue to be one of the largest LPs for funds that we back. Uh, and increasingly, we are becoming more and more specialized, looking at higher impact. So if in case of financial inclusion, in case of climate, food and agri-tech are big ones for us. Energy, food security, energy security are important themes for us. Healthcare, especially inclusive healthcare, increasingly rural inclusive healthcare, and digital economy continue to be areas that we work with. We are guided by what is known as India UK 2030 roadmap, which lays out priorities for the two countries. We draw our strength from there and figure out the areas that we can make the maximum impact. We have been, like I told you, transformative in what we have done. We have created 500,000 jobs directly and almost 1 million jobs indirectly. We have transformed or helped transfer lives and livelihoods of millions of people in the country. But that's something that we do. While we are proud of it, it's something that gives us more and more uh, it gives us more and more confidence to continue on that path. We can move to the next slide. Over the period, and this is something which comes out of the report that you've published also, what is important for us to see what we are doing and how do we measure our progress. And these are the two areas that we are focusing on. So we have developed for ourselves what is known as PSI framework, which is essentially productive, sustainable, and inclusive development. Every action, every investment we make, we value and measure it against the three dimensions. Productive means, are we catalyzing markets? Are we creating more jobs? Are we creating new businesses? And sustainable, obviously, is how it ties in with the climate goals for the country and for the businesses. And inclusive is, does it promote gender equity? Are we bringing in low-income societies? Are we impacting the marginalized sets of communities? And we have on the slide examples of all three. I will just take example of Ayana, which is in the middle. This is an investment. This is a platform we created. It's more than 1 gigawatt. It constitutes almost 5% of India's renewable existing capacity today. And when we created it, we were able to corral a lot of capital, both UK's and Indian capital, to bring together a professionally led, professionally managed renewable platform. Now, the successes of these platforms help bring in a lot more capital, not only in the platforms that we create, but other platforms which exist. And that is a very important point. DFI money goes on to validate business models, sometimes at the experiment stage, sometimes at the growth stage, and sometimes at the expansion stage. Once we are able to do that, we believe that the commercial capital then comes and creates far greater impact. And that's when we move out and let commercial capital take up. We could move to the next slide, please. Yeah. So, and this is again a theme that we want to really hope that IIC takes up, which is measuring of the impact. I am of the firm belief that there is a lot of capital available around the globe looking for good investment opportunities in India. The question that everybody asks is, what is good? How do we measure good? How do we measure between one GP and the second GP? There is no uniformity of what development is. This is our humble attempt of putting together a construct of having a uniform measurement across all BII's investment. We do a productive score, a sustainable score, and an inclusive score. Addition of that out of 10 gives us a score of our investment. It's an objective way of letting ourselves know that is our capital going towards the most impactful segment that it could. We've over the period of time we've developed fairly deep and strong algorithms which allow us to come to this scoring. But I would imagine that this or equivalent of this is something that country really needs, because otherwise as an industry we will struggle when we go to our LP say that my impact is higher than the other person's impact. A scoring, a measure will just help us as an industry consolidate better and take us to a situation where we will be able to attract more and more global capital coming into the country, and then measuring it and reporting it back to our investors of how we have performed. We could go to the next slide. These are just a few. Okay. So the and yeah, sorry. So I think there's a slide missing. Maybe I'll just conclude it. Yeah, there is one. The 4 or 5 things that I hope that the conclave today deliberates is: one, how do we bring in more gender finance capital into the country through IIC and through other means? The second piece is, how does climate, which is at scale, dovetail with IIC's role? 3, part of digital finance. And for climate, the key question that all of us struggle with is, does sustainable and inclusion have a Venn diagram intersection, or are they completely exclusive? Are there areas which exist where investments can flow in, which have a large impact directly on climate, but yet includes marginalized societies? The third is the role of digital to make impact at scale. And the final one, which we spoke about, is impact measurement. The 4 elements, if they come together, I believe has an ability to attract a lot of capital to the country. So next time when Ramraj publishes his report, the number will actually hopefully be in 2 digits in $1 billion. And with that, I thank you all for inviting me. I thank you all for giving BII the name and space to share what we do. And we wish you very good luck for the day and for the year. Thank you so much.
Thank you, Manav. You've shared the amazing and transformative work that BII has been doing and also helped us, I think, understand.
I mean, Divya,
Sure,
there was a question for Manav, I think, in the chat box. So I'm sorry, I'm butting in.
No worries.
Ask the question. So Manav, there's a question around that, BII has been working in all of these, lots of areas. Is blended finance also something that BII would be open to considering as investment or as an asset class? Is one of the questions which came up in the chat box. And I just thought before, we say thanks to you, maybe you can take up this question and we can move forward from there.
No, thank you, Ramraj, and that's a very important and interesting question. And the answer to that is actually a strong yes. We actually have 3 pools of capital with various degrees of risks that we attach to them. One is our standard normal capital. We also have a catalyst pool, and our shareholders are very keen that we increase our catalyst pool. Catalyst pool, by its very name, has a requirement for higher risks and actually higher loss ratios. But on top of it, we also have a kinetic capital right now focused on climate investments, which then blends with higher cost of capital and brings down the breaks up the flexibility and brings down the cost of money available for various investments. We also have a small facility called BII Plus, which is essentially technical assistance piece that we provide to our investee companies for work in inclusion, for work in climate, for work in market making. So the short answer is yes, a bit of details, and we'll be very happy to engage with potential investees to look at which part of capital can we blend in and find solutions.
There was another question on MSME clean energy transition. Any thoughts on that? There was some discussion last year, and also this seems to be a pretty substantial initiative which is desperately needed, because institutional large capacity solar, wind is obviously there is a lot of funding, but this whole MSME energy transition is something that maybe you could just take as a last question before you let you go.
Yeah. Again, Ramraj, very important question, because it is addressing a key element. MSMEs, as you know, account for almost 40% of our exports and a large proportion of our jobs. We tackling that in multiple ways. First is to ensure that they get credit, MSMEs, for the green transition, and through our investments in both NBFCs who invest there. Plus, we also have digital businesses like Bizongo. We also are looking at credit guarantees who then lend to MSMEs. In some of these, we are blending, like we spoke about, our technical assistance to help transition for MSMEs for green for greening of supply chain. We also have investments in CNI, which obviously start from smaller to larger enterprises. It's not only for smaller enterprises, but overall, this is an area that we continue to focus on, both through financial inclusion products as well as direct investments into energy producers.
Great. Over to you, Divya. I'm sorry. Once again, my apologies. I came in on an uncharacteristic basis. Go ahead, Divya.
Not at all, Ramraj. Thank you, in fact, for bringing up those questions. I think what Manav has explained must have, many people must have been having the same questions. So thank you for bringing them up. And thanks, Manav, for sharing your thoughts. I think everything that you spoke about blended finance and the impact areas for India have really set the tone for what we want to discuss next. So really appreciate your kind words there.